Your grocery bill has doubled since 2019. And the companies blaming inflation just admitted in court they were lying to you the whole time. You know that feeling when you walk into the grocery store with the same list you've always had: milk, eggs, bread, the basics, and somehow your bill is $50 more than it was a few years ago? You're not losing your mind. Food prices are up 32% since 2019. That's not a typo. 32%. And here's the thing that makes you feel crazy.
What should the poverty line be?
To combat higher food prices, President Trump recently announced his administration is rolling back specific tariffs on grocery items ranging from coffee, beef, and bananas.
And that man that's up there in that White House, he's killing us.
And eggs are way down now. We're getting prices down for this country.
The rising cost of food. This week's Consumer Price Index report revealing prices for groceries jumped 13.5% over the last year.
The news keeps telling you inflation is cooling. The experts say supply chains are fixed. The pandemic is over. So why are you still paying double for the exact same cart of groceries? The answer is simple. They're not charging you more because they have to. They're charging you more because they can. And the receipts, the actual internal emails from grocery executives, prove they planned it all along. But the real betrayal is what they did next. Let me show you what this actually looks like in your wallet. Remember when you could get a dozen eggs for $2? Now they're $6 on a good day. Beef prices are up 14% just in the last year. Your grocery staples, the things you buy every single week, have been hit the hardest. And it's not just higher prices. They're giving you less and charging the same. It's called shrinkflation, and it's everywhere. Your favorite cereal box, it went from 24 ounces to 21 ounces. Same box, same shelf, same price. You just get 11% less cereal. Toilet paper rolls, fewer sheets per roll. Paper towels, 60% of brands shrunk their package sizes but kept the prices identical. One study found that 1/3 of all grocery items have physically shrunk since the pandemic. 1/3. The worst offenders? Household paper products, breakfast cereals, and candy. Family-size Frosted Flakes dropped from 24 ounces to 21.7 ounces, a 40% increase in price per ounce. Party-size Reese's went from 40 ounces to 35.6 ounces. And you probably didn't notice because that's the entire point. They're banking on you not calculating the unit price, not keeping your old packages to compare, not realizing that your dollar buys less every single trip. The average American household now spends about $127 a week on groceries. That's 7% more than just last year, and 19% more than 2022. For families who were already stretched thin, this isn't an inconvenience, it's a crisis. Lower-income households spend over 30% of their income on food. When prices jump this fast, something else has to give: healthcare, rent, savings. The margin for error disappears. Now here's where this gets absolutely infuriating. In August 2024, a Kroger executive named Andy Groff sat in a federal courtroom during an antitrust trial. The FTC attorney asked him about an internal email he'd sent to other Kroger executives. In that email, Groff wrote something remarkable. He said, and I quote, "On milk and eggs, retail inflation has been significantly higher than cost inflation." Let me translate that for you. Kroger's costs went up a little. They raised your prices a lot, way more than they needed to cover their expenses. When the attorney pressed him on this, Groff admitted under oath that Kroger's strategy was to pass through our inflation to consumers, meaning they saw inflation as an opportunity, not a problem. Think about that. While you were clipping coupons and switching to store brands and skipping meals to make ends meet, Kroger executives were sending emails celebrating how much extra profit they were extracting from your desperation. And this wasn't some rogue executive. This was the company's senior director for pricing, the guy whose literal job is deciding how much you pay. Internal emails showed that when Walmart and Meijer dropped egg prices by 14 cents a dozen, Kroger looked at their competitor, Jewel-Osco, saw they kept prices high, and decided to match the higher price. Not the lower one, the higher one. But here's where it gets worse. Kroger isn't alone. This is happening across the entire grocery industry. A Federal Trade Commission report from March 2024 analysed the biggest grocery retailers during the pandemic: Kroger, Walmart, Amazon, and found something stunning. Their profit margins didn't just stay steady. They exploded. In 2021, food and beverage retailers saw revenues exceed costs by over 6% higher than their previous peak in 2015. Then in 2023, it got even better for them. Profit margins hit 7% over costs, not despite the crisis, because because of it. The FTC concluded that grocery companies seem to have used rising costs as an opportunity to further hike prices to increase their profits. And profits remain elevated even as supply chain pressures have eased. Translation: they saw you struggling and decided to pile on. They could have absorbed some costs. They could have kept prices reasonable. Instead, they saw a once-in-a-generation opportunity to reset customer expectations about what food should cost, and they took it. So why did they do it? Why squeeze customers when they're already hurting? Because the grocery industry has been quietly consolidating for decades, and COVID was the perfect moment to capitalize on their market power. Here's what you need to understand. In 2019, the 4 biggest grocery companies controlled over 30% of all grocery sales in America. 30 years earlier, half that. This concentration of power means fewer players, less competition, and more control. When you only have 1 or 2 grocery stores in your area, they can charge whatever they want. You can't just go somewhere else. During the pandemic, these dominant players weaponized their size. They imposed strict delivery requirements on suppliers and threatened massive fines if shipments were late or incomplete. Walmart actually tightened these requirements as the pandemic went on. Suppliers had to choose deliver to the big guys first or lose their contracts. Smaller grocery stores got left behind and couldn't stock their shelves. Costco's revenue grew 66% from 2019 to 2024. Their net profit up 96%. Think about that ratio. Their sales went up by 2/3, but their profit almost doubled. That's not inflation. That's pricing strategy, and their stock has been soaring. But it gets more calculated than that. Grocery companies have spent decades studying consumer psychology, and they know something critical. You're more sensitive to price increases than package size reductions. You'll notice if milk jumps from $3 to $4. You won't notice if the package shrinks from 64 ounces to 59 ounces at the same price. This is what the industry calls price pack architecture, and it's become a science. Companies now hire entire teams to figure out the exact threshold where you'll notice. They know you'll still buy that cereal box at $4.50, even if there's 10% less inside, because you're not doing the math. You're grabbing it off the shelf and moving on with your life. One industry insider put it this way: when costs go up, companies face a choice. Raise prices, which is visible and risky, or shrink packages, which is invisible and safe. They chose both. They also banked on another fact about human psychology. Once prices go up, they never come back down. Not really. Economists call this price stickiness. Even when their costs dropped, which they did. By the way, grocery companies didn't lower your prices, they pocketed the difference. In 2023, commodity prices that had spiked during the pandemic started falling. Oil prices came down. Shipping costs normalized. Wholesale food prices eased. But grocery prices, they kept climbing. In some categories, they stayed flat, but they didn't fall. Once customers accepted the new price, that became the floor. The FTC pointed out that grocery worker wages did rise faster than average during this period, about 15 percentage points higher than other sectors since 2019. That's real. But here's the key. Grocery stores blamed all of their price increases on labor and commodities, when their profit margins prove that costs don't explain the gap. If they were just passing on higher expenses, margins would stay flat. Instead, margins expanded. This wasn't about survival. It was about seizing an opportunity. Company earnings calls from 2021 and 2022 are full of executives barely containing their excitement. One Kroger CFO told investors, "We've been very comfortable with our ability to pass on the increases that we've seen at this point, and we would expect that to continue to be the case." Another time, Kroger's CEO literally said, "A little bit of inflation is always good in our business." Let that sink in. Inflation isn't their enemy, it's their friend. Because when everyone's raising prices, no single company looks like the bad guy. You can't comparison shop your way out of industry-wide coordination. The proof is overwhelming. Let's go through the receipts. First, the FTC report. After studying the biggest grocery chains for years, they concluded that dominant firms use supply chain disruptions to come out ahead at the expense of their competitors and the communities they serve. Food and beverage retailer profit margins hit 7% over costs in Expand. 2023, the highest in over a decade. Second, company earnings. Costco's operating margin went from 12.2% in 2022 to 12.5% by 2024. Since 2019, their revenue climbed more than 66%, while net income jumped 96%. That's profit growing faster than sales, the definition of margin expansion. Third, the Kroger trial documents. Andy Groff's emails weren't cherry-picked. They reflected systematic pricing decisions across thousands of products. When questioned about egg pricing strategies, another executive testified that Kroger deliberately tracked competitor prices and chose to match the highest price, not the lowest. That's not responding to market forces, that's exploiting them. Fourth, the shrinkflation data. A Capital One shopping study found shrinkflation averaged more than 16% among national grocery brands in 2024. The Government Accountability Office tracked common household goods and found that while shrinkflation affected less than 5% of total products, it hit popular items the hardest. Paper products like toilet paper and paper towels shrank at the highest rates. Fifth, consumer data. A Purdue University survey found that 64% of Americans expected food prices to keep climbing in 2024, even as official inflation numbers showed deceleration. Why the disconnect? Because people could see their bills. They knew what they were paying. The government's inflation numbers measure the rate of change, but prices themselves stayed high. Going from 11% inflation to 2% inflation doesn't make your groceries cheap again. It just means they're getting more expensive, more slowly. Sixth, statements from companies themselves. A Hostess brand CEO told investors during an earnings call, "Pricing, by definition, is a change model. It's temporary. Consumers get used to it. When all prices go up, it helps." A Kimberly-Clark CEO said, "If the price goes up on bath tissue, generally doesn't mean you're going to use the bathroom less." These aren't off-the-cuff remarks. They're admissions of pricing power. The pattern is clear. Grocery companies use the pandemic to reset price expectations, shrink products, and lock in higher margins. And it worked. So what does this mean for you going forward? Unfortunately, not much is changing. Prices aren't coming down. They might rise more slowly, but the 32% increase you've already absorbed, that's permanent. Grocery companies have trained you to accept these prices, and they're not going to voluntarily give that up, especially when their shareholders are seeing record returns. The shrinkflation trend will continue. As long as it's legal and effective, companies will keep doing it. Some states are pushing for laws requiring retailers to disclose when package sizes change, but those efforts face resistance. France's Carrefour supermarket started warning customers about shrinkflation, but in America, you're mostly on your own. Your best defense? Pay attention to unit prices. Most stores display price per ounce or per count on shelf tags. Use those numbers, not the package price. It's annoying, it's slower, but it's the only way to see through the packaging tricks. The consolidation problem is getting worse, not better. Kroger's trying to merge with Albertsons right now. The FTC is fighting to block it, arguing it would reduce competition and drive prices even higher. If that merger goes through, you'll have even fewer choices and even less pricing pressure keeping costs in check. And here's the uncomfortable truth. This is just groceries. This same playbook, blame inflation, shrink products, expand margins, lock in higher prices, is happening in industry after industry. Restaurants, consumer goods, housing, healthcare, everywhere. The grocery story is just the clearest example because you see it every week. The companies got away with it because the conditions were perfect. Supply chain chaos gave them cover. Inflation gave them an excuse. Market consolidation gave them power. And consumer psychology, the fact that you eventually accept new price levels as normal, gave them permanence. Going forward, expect more of the same. Prices will keep drifting up. Packages will keep shrinking. Profit margins will stay elevated. Because once you've successfully trained customers to pay more and accept less, why would you ever go back? You weren't imagining it. Your grocery bill really did double. And it wasn't just inflation. It was a calculated strategy to extract as much money as possible from you while you were at your most vulnerable. The executives admitted it. The data proved it. And your wallet knows it. Now you know what they did. And more importantly, you know they're not done doing it. If you want more breakdowns of why everything costs more and delivers less, subscribe. Because this grocery story, it's just the beginning.